Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
The future of AI stocks? TSMC commentary suggests AI megatrend. This article was written by Beth Kindig. Summary. Pause. TSMC reported record Q4 revenue of $33.73 billion, up 25.5% year-over-year and 1.9% sequentially, exceeding the midpoint of guidance by 2.8%. TSMC is witnessing strong demand from smartphone and HPC AI applications and expects a fast ramp in 2026. TSMC's ability to generate exceptionally strong profits showcases that the company is one of the best-managed companies in the world. I am Beth Kindig. I lead the investing group Tech Insider Network, specializing in tech growth stocks. We use fundamental and technical analysis to get ahead of the tech investing curve. Our members receive trade alerts, webinars, deep dives, and more. TSMC is one of the least sensational management teams in the AI space. Yet management explicitly called AI a multi-year megatrend in their most recent earnings call, with demand now being pulled not just by chip designers, but directly by hyperscale cloud providers seeking to lock in capacity. Management stated, "Our customers, who are mainly the cloud service providers, are also providing strong signals and reaching out directly to request the capacity to support their business. Thus, our conviction in the multi-year AI megatrend remains strong, and we believe the demand for semiconductor will continue to be very fundamental." When the world's most advanced foundry says hyperscalers are coming to them directly for capacity, it signals that AI demand remains foundational. Perhaps most importantly, TSMC is not a flip-the-switch business model to where demand can be turned on and turned off quickly. Wafer capacity must be planned years in advance, which makes these signals particularly meaningful. TSMC already sits beneath tens of trillions of dollars in market capitalization, with customers including Apple, Nvidia, Broadcom, Amazon, AMD, and Google. While each is pursuing AI through a different mix of merchant GPUs, custom silicon, and software, they all converge at the same point, TSMC's advanced manufacturing. As the roadmap progresses to N2 and A16, customer dependence on TSMC's leading-edge capacity increases. The company reported record Q4 revenue of $33.73 billion, up 25.5% year-over-year and 1.9% sequentially, exceeding the midpoint of guidance by 2.8%. But the more important takeaway was not the quarter, rather it is the visibility that TSMC provides. Below, we break down how this multi-year AI megatrend translates into durable visibility for TSMC, expands pricing power for advanced nodes, and a longer runway for earnings growth on arguably one of the strongest AI stocks on the bottom line in the space. TSMC raises AI accelerator forecast to mid to high 50% compound annual growth rate, evidence of a multi-year megatrend. TSMC stands out as the most reliable barometer for tracking AI demand trends. During the Q4 earnings call, management raised the forecast for revenue growth for AI accelerators to a mid to high 50% compound annual growth rate over the 5-year period from 2024 to 2029, up from the mid 40% compound annual growth rate provided during the Q4 2024 earnings call. This strongly conveys that AI demand is expanding. Similarly, the company's long-term revenue growth forecast was raised to 25% compound annual growth rate in US dollar terms for the 5-year period starting from 2024, from the earlier 20% compound annual growth rate provided during the Q4 2024 earnings call. Management expects AI accelerators to drive the largest share of incremental revenue growth, while overall growth will continue to be supported by smartphones, high-performance computing, HPC, IoT, and automotive over the next several years. AI accelerator revenue accounted for a high teens percentage of total revenue in 2025, up from the mid-teens in 2024. As manufacturing complexity continues to rise, engagement lead times for advanced chips have extended to at least 2 to 3 years. The company's CapEx in 2025 grew by 37.4% year over year to $40.9 billion, Management expects 2026 capex in the range of $52 billion to $56 billion, implying a year-over-year growth of 32% at the midpoint. Notably, 70 to 80% of 2026 spending will be allocated to advanced process technologies, 7nm and below, signaling management's confidence in sustained long-term demand driven by AI. TSMC takes 2 to 3 years to build a new fab, with the increase in 2026 capex spending suggesting strong growth for the years 2028 and 2029. Responding to an analyst question on whether the industry is in an AI bubble, Chairman and CEO C.C. Wei answered, "Okay, go cool. You essentially try to ask us, say, whether the AI demand is real or not. I'm also very nervous about it. You bet, because we have to invest about USD $52 billion to USD $56 billion for the capex, right? If we didn't do it carefully, and that would be big disaster to TSMC for sure." Management mentioned that they spent $101 billion in capex in the last 3 years, and they expect capex to be significantly higher in the next 3 years. Advanced nodes, why TSMC's semiconductor moat is widening. While 2 nanometer defines the next phase of the roadmap, 3 nanometers remains the node supporting most AI deployments today. The company's advanced node, 3 nanometers, offers 15% better performance than the 5 nanometer process when power level and transistors are equal. The die sizes are an estimated 42% smaller than the 5 nanometer, and TSMC also states the 3 nanometer process can lower power consumption by as much as 30%. Power efficiency is a major advantage, helping to deepen TSMC's moat. Samsung was first to introduce 3 nanometer process chips in 2022, yet has not been as competitive on yield and power efficiency at a roughly 10% to 20% difference compared to TSMC. The moat is visibly seen in TSM's pricing power, with the dominant foundry charging 25% more for its 3 nanometer process compared to its 5 nanometer process, with customers willing to forego Samsung to pay the higher pricing. TSMC offers several variants of its 3 nanometer process, including N3E, N3P, and N3X, enabling customers to tailor designs for different applications, such as consumer devices like Apple's chips versus AI accelerators for hyperscalers. N3E serves as the baseline for IP design, offering approximately 18% higher performance and 34% lower power consumption compared with N5. N3P provides further improvements in performance and energy efficiency, while N3X is optimized for high-performance computing workloads, delivering very high performance at the cost of increased power leakage. The company has entered the volume production of the most advanced process node, N2, in 4Q 2025. The 2 nanometer marks a new era in TSMC's transistor architecture, as N3 relied on FinFET, while Gate-All-Around (GAA) is being introduced for N2. As the name implies, the gate is wrapped around on all sides compared to FinFET, which had a gate wrapped on 3 sides. By having the gate wrap all around, a greater surface is created for better electrostatic control and to also reduce leakage. For TSMC, the 2nm will feature NanoFlex technology, which is similar to FinFlex, to where designers can use cells from different libraries. However, due to the new Gate-All-Around (GAA) nanosheet transistors, there are additional benefits, such as customizing the width and height of cells. For example, GAA can uniquely widen the channels for a performance boost, or there is an option to narrow the channel to optimize power cost. The goal is to increase the performance per watt to enable higher levels of output and efficiency. According to management on the Q2 2025 earnings call, N2 delivers 10% to 15% speed improvement at the same power, or 20% to 30% power reduction at the same speed, along with more than 15% chip density gains versus N3E. TSMC is witnessing strong demand from smartphone and HPC AI applications and expect a fast ramp in 2026. The company also introduced N2P as an extension of N2 family. N2P features further performance and power benefits on top of N2, and volume production is scheduled for the second half of 2026. Additionally, A16, featuring Super Power Rail (SPR) technology for complex HPC designs, is also on track for volume production in the second half of 2026. As chips progress to these more advanced nodes, such as NVIDIA's Rubin moving to 3 nanometers, and AMD now building CPUs and GPUs on 2 nanometers, TSMC stands to benefit from increased pricing power. This is because wafers at these new and upcoming nodes carry significant premiums versus the prior node, accounting for substantial increases in performance or power efficiency. In Q4 2025, advanced nodes below 7 nanometers accounted for 77% of wafer revenue compared to 74% in Q3 2025. 3 nmm accounted for 28% of wafer revenue, and 5 nmm accounted for 35% compared to 23% for 3 nmm and 37% for 5 nmm in the previous quarter. TSMC stock, $122 billion record revenue. TSMC reported record Q4 revenue of $33.73 billion, up 25.5% year-over-year and 1.9% quarter-over-quarter, beating the midpoint of guidance by 2.8%. The revenue beat was driven primarily by strong AI-related demand. Revenue growth is expected to accelerate next quarter, with management guiding Q1 revenue of $34.6 billion to $35.8 billion, implying 37.9% year-over-year growth and 4.4% sequential growth. For the full year, 2025 revenue grew 35.9% year-over-year to a record $122.42 billion. Looking ahead, management guided 2026 revenue growth to be close to 30% year-over-year in US dollars. HPC revenue continued to expand, rising 4% quarter-over-quarter in NT dollars and accounting for 55% of total revenue in Q4. For FY25, HPC revenue in NT dollars increased 48% year-over-year and represented 58% of total revenue. The sequential deceleration in HPC revenue in Q3 appears consistent with a platform transition, as NVIDIA prepares to shift from Blackwell, built on TSMC's customized 5nm N4P process, to the upcoming Rubin architecture, which relies on TSMC's customized 3nm N3P node. With Rubin chips expected to enter mass production in the second half of 2026, we expect HPC revenue growth to re-accelerate in the coming quarters. Management also highlighted a strong ramp for N2 in 2026, reinforcing sustained AI-driven demand. As shown in the chart below, TSMC experienced a similar slowdown in HPC growth during the second half of 2022 and the first half of 2023, amid the transition to NVIDIA's Hopper architecture. NVIDIA began mass production of Grace Hopper chips in May 2023, after which HPC revenue growth resumed. TSMC Q4 results, GAAP EPS grew by 40%.
TSMC's ability to generate exceptionally strong profits showcases that the company is one of the best managed companies in the world. Despite the rising inflation, tariff concerns, technological advancement, trade wars, overseas fab expansion, and geopolitical tensions, TSMC has overcome these challenges by continuing to generate superior profits. Margins continue to expand due to cost controls, higher capacity utilization rates, economies of scale, and better price negotiation with customers and suppliers. TSMC's Q4 GAAP EPS grew by 40.2% year-over-year, beating estimates by 5.2%. That strength is expected to continue into 2026. Earnings are projected to grow roughly 55% year-over-year in Q1, followed by another strong step-up in Q2 with 40.1% growth. After delivering more than 50% EPS growth in 2025, consensus estimates call for earnings to rise by more than 20% annually in both 2026 and 2027, pointing to a sustained growth profile rather than a one-year spike. In Q4, TSMC generated $23.4 billion in operating cash flow, up 21.9% year-over-year, with an operating cash flow margin of 69.4%, down modestly from 71.4% in the prior year period. Free cash flow increased 48.8% year-over-year to $11.9 billion, with margins expanding nicely to 35.2%, up from 29.8% last year. Notably, capital expenditures grew just 2.5% year-over-year to $11.5 billion in the quarter, supporting strong free cash flow conversion. Management has indicated this moderation is temporary. As noted above, CapEx is expected to accelerate meaningfully in the coming years as advanced node demand ramps. When the world's most advanced foundry raises its long-term AI growth forecasts, commits more than $50 billion annually to capacity,
and openly states that hyperscalers are coming directly to secure wafers years in advance. It provides a level of visibility that few companies in the AI ecosystem can match. TSMC's willingness to materially expand CapEx through 2026, knowing that fabs take years to come online, signals confidence that extends well beyond the next product cycle and into the latter half of the decade. We'll expand on how this visibility feeds into the Tech Insider Network's broader AI positioning and where we see the next phase of opportunity in our Q1 2026 Top 15 AI Stocks report. This 50-plus page report, totaling over 20,000 words, identifies many lesser-known AI stocks, leading the charge in the three critical pillars of the AI megatrend: AI networking, AI energy, and AI inference. Royston Roche and Damian Robbins, equity analysts at Tech Insider Network, contribute.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.